Good morning. You're watching All You Need to Know on BloombergQuint Live, India's first digital live streaming business news service. I am Agha Vakil. First, the headlines. Dow records its biggest single-day fall after U.S. authorities extend testing for the coronavirus outbreak. Asian markets open at least 2% lower. Crude continues to trade at a one-year low. Investors flock to safe havens like gold, with the precious metal trading at a 7-year high. Experts believe there's more room on the upside. Economists expect India's GDP to recover marginally in the third quarter. The numbers come out this evening. And bank credit grew at its slowest pace in more than 2 years in the first 15 days of February, despite recovery being witnessed in most other macro indicators. And IndusInd Bank names Sumant Katapalya the next managing director and CEO. He takes over from Ramesh Sopti on March 24. The U.S. markets took a big knock on Thursday, with the Dow posting its biggest intraday loss as investors went into risk-off mode. This is after a lady in California tested positive for coronavirus, prompting the authorities to increase surveillance. Renita Young sums up what happened in this report.
U.S. stocks closed lower on Thursday. The Dow Jones Industrial Average and S&P 500 now down more than 10% from the highs they reached earlier this month. All happening as investors continue to be concerned about the spread of the coronavirus and how it may impact global growth. And we are still in the middle of corporate earnings season. One of the latest companies to report, Nielsen Holdings, missing on adjusted earnings per share for 2020, that forecast. And Etsy's fourth quarter revenue beat the highest analyst estimate. Meanwhile, copper stockpiles swelled to the highest since 2018, and gold prices hovered around unchanged. At some times during the day they were higher, sometimes they were lower. Yet one thing we know that may boost, aside from safe haven investments, is the fact that traders are pricing in rate cuts in the U.S., Eurozone, and Canada. That could make gold more attractive, since gold does not pay an interest. That's your look at your Wall Street action on Thursday. In New York, I'm Renita Young for Bloomberg News.
Well, and the latest case reported of a lady contracting the coronavirus in California has foxed authorities. This lady has no record of traveling out of the United States, prompting authorities to ramp up surveillance and check. David Becker of Bloomberg News reports.
Well, the case that we saw yesterday in Northern California is kind of troubling in that we know very little about how it popped up. We have had so far in the state just 33 confirmed cases of coronavirus, and most all of those people have been in instances where the authorities knew pretty well just how they had contracted the virus. The case that popped up yesterday, that doesn't apply. We don't have a very clear idea at all of how this woman actually came into contact with the virus. She wasn't traveling. She hasn't had any contact with any people who are known to have been exposed to the virus. And even though there's an Air Force base in the county where she lives that has some people in quarantine with the virus, she hasn't had any known contact with that base. So it's quite a mystery as to how she came down with it, and that's what's so worrisome about it.
Well, and that certainly has had implications on Asian markets at this point in time, considering we are looking at further weakness. A whole host of them, which are currently open, are trending in the red. We have Rosalind Chin, who is joining us from Hong Kong for the latest on Asia. Rosalind, it's not looking very good across the globe right now.
You're right, it's pretty ugly. Right across the board, we see markets like Japan really pulling a lot lower, more than 3% down at this point in time. Topics and the Nikkei both down by more than 3%. Kospi also losing more than 2% right now. And, you know, we're just seeing a lot of concerns globally as this coronavirus spreads. Global investors on edge. We've had the World Health Organization saying that we're at a decisive point with warnings that, you know, we could be looking at a pandemic globally. It's the second day now, though, that we've seen the number of cases outside of China increase faster than the number of cases inside China. So this is what is fueling concerns. Of course, we are seeing the number of cases in China slightly moderating, though, at that time. So then we see the Nikkei lower by more than 3%. We've also seen that it's really close to or in correction territory now, with Korea and Australia similar. Kospi is losing, and that could even break below the 2,000 level right now. It's the 2010, and that, of course, if it does fall below 2,000, could trigger some pretty heavy selling. Some heavy margin calls there, and worries about growth continuing to impact in South Korea. Korea now has seen more than 2,000 cases. In fact, it's probably the epicenter for the spread of the virus outside of China at this point in time. Chinese markets, they have opened lower right now. We're looking at Hang Seng Index, Shanghai Composite, and CSI 300 all trading much lower today. This is after they look like they might be able to claw back a little bit yesterday. They were actually, they did close slightly higher on Thursday, but today really ending the week, it looks like back in negative territory again. The Chinese authorities, of course, have been trying to add stimulus to the markets, to the economy, to help buoy those markets there. But really right now, the sentiment looks like it's taking over, very, very much risk off right now. Globally, we're seeing more than 83,000 cases of the virus now, and that is increasing, of course, quite rapidly every day. Japan is saying that they're recommending more and more companies be recommending their employees to work from home. Kirin appears to be the latest one. They're closing all schools from March the 2nd. And we could see the number of cases in Japan increase quite rapidly, as until now they have been doing what is called limited testing, which means only testing the more severe cases, not testing the mild cases. And so once they start testing mild cases, we could really see the numbers there in Japan increase quite rapidly. And of course, we've got the IMF and the World Bank saying that they are reconsidering the size and the scope of their spring meeting. So this impacting even those large global institutions. Globally, stocks have lost about $6 trillion in value since the coronavirus really started hitting, and that was estimated to be around January the 20th. And of course, it will continue to weigh heavily on investors. Back to you.
Right, Rosalind, thank you so much for joining us and giving us that update. And of course, things continue to get grimmer. But governments should first fight the virus and worry about stimulus later. The former RBI governor, who was speaking to Bloomberg News, says coronavirus will also prompt countries to turn more protectionist in the future. Listen in.
Certainly will be a legacy in the sense of businesses rethinking their long supply chains, because today, with these global supply chains, which are focused on maximizing efficiency, it's also subject to risks in the weakest link. If it is disrupted anywhere, the entire supply chain is held ransom. And companies are going to start rethinking that. Should we actually have these really spread out global supply chains, or should we bring them back closer home? And how much diversification should we have? Should we have multiple production sites across the world rather than have them focused primarily in Asia? So I think we'll see a lot of rethinking on this. Coming on the backs of the trade disruption, now we have this. I think globalization in production is going to be hit quite badly.
Does that sound like a good thing to you for future prospects for global growth if we do see sentiment sort of trending towards a reversal of globalization of trade?
No, I think that it is going to be problematic, just primarily in terms of productivity. Earlier you produced in the country where it was easiest to produce. Now you're going to produce nearer the markets regardless of the cost of production. Undoubtedly, that's going to increase the cost of production. But it's also going to make it less in countries' incentives to keep borders open. And the trend towards protectionism that has been rising over the last few years, I think, can only get stronger when countries have less incentive to maintain these global supply chains. So, no, this is definitely a strike against globalization.
We were just talking to our reporter previously about a piece out on the Bloomberg about this time it's different. We hear this so often, but this time it does feel different, right? This is an event where analysts and investors and economists are having to scramble to model around things like infection rates and dislocation of supply chains and demand and, everything else like quarantine and trade restrictions and social discontent and political issues all wrapped up into this coronavirus outbreak. Is this something that central banks that have been so used to rushing to the rescue since the global financial crisis, is this kind of thing something they can fix?
No, it's not easily fixed. First, it's both a shock to demand because people are staying at home, people aren't buying, but also it's a shock to supply because the supply chains aren't working. There's not that much that central banks can do to supply. And as far as demand goes, I mean, the single biggest tool that they have, the interest rate policy, is largely played out in parts of the world. Japan doesn't really have it, and neither does Europe. They've gone negative, but there's not much more room to go further negative. And so at this point, they have tools like resuming quantitative easing in a bigger way, but these have only modest effectiveness. So at this point, central banks can say we will act when the time comes. There's not much ammunition left. It really is up to the fiscal authorities, but more broadly, we also need to consider, whether direct action against the spread of the epidemic is going to be the thing that restores confidence.
What types of fiscal measures are we talking about? Because, for example, Hong Kong just had cash handouts, but a lot of people are saying people will just save, not spend.
I think what you need is a combination of both spending power as well as greater confidence. And that's why I keep saying that we need to see some containment of this epidemic. At this point, I would say the best thing that governments can do is to really fight the epidemic rather than worry about stimulus measures. That comes later.
Well, that's the word coming in from former RBI Governor Raghuram Rajan. But let's take a look at what we can expect in trade today. And we have Darshan Mehta, who's joining us for the same. Darshan, there would have been some guesses that there could be a possible short covering, but it doesn't seem likely at this point in time.
Yeah, I think that was what happened. I think between 3 and 3:30, I think when the Dow futures recovered, a lot of people went long. And that was the reaction that you saw on the Nifty, and probably they will get crashed today. You can clearly see the weakness. The Dow was down over 1,000 points, and look at the SGX Nifty. So on opening, you will have a 150 point or probably even more drop on the Nifty. So we're coming very close now to the 11,000 mark. Call writers, are taking center stage. Put writers are getting thrashed across the board, and today there will be more pain. So put writers, at least in this series, at least in the last series, have actually taken massive losses. Now, what happened as far as some of our indices are concerned? So you could see that the Nifty was down 45 points, and it recovered significantly, and that was what I was talking about, Agam. A lot of people started playing the Nifty, indicating that there could be recovery that would come in, but the pain was clearly being seen on the mid cap and the small cap end of the market. So that was down almost 0.8%. As far as the banks are concerned, you could see the PSU banking index that was down over 2.5%. So there was enough shorting positions that were being seen. Now, how did the ADR pan out in trade? Across the board, there was selling. Infosys, Tata Motors, ICICI Bank, Dr. Reddy's, all of them will be in focus. And Tata Motors, again, you need to focus because of the exposure that it has to China on whether the JLR recovery definitely will happen or no. I think the only one which was somehow not as much impacted was the HDFC Bank, and that too was down 0.8%. Again, FIs were sellers in the market. They sold in 3,000 crores. DIs at this point of time are matching up, but the sell flow certainly seemed to be on the higher side this time. Now, what contributed on the Nifty? What aided the Nifty? Again, Kotak Mahindra Bank and Sun Pharma, HUL actually moved up, but banks clearly seeing a lot of selling. So ICICI Bank, SBI, Reliance and TCS. So four of the large companies, at least both on the exposure on the Nifty, and SBI and ICICI Bank on the Bank Nifty actually saw fresh short positions. Now, how did you see the last day of trade setup, and how did the futures and option market pan? Today, it's a new series. Open interest build up of 38% on the short side. We had said yesterday that the rollovers on the Nifty was on the short side. We're trading at a discount of 4 points. The Bank Nifty, again, the position seems to be worse at this point of time. 40% open interest build up on the short side. So there is enough selling that's happening. Yesterday, we actually went below the 30,000 mark in trade before recovering slightly, and that is where a lot of long positions were taken. Today, probably there will be sell-off that will happen. Now, if you look at where positions are taken, again, look at where call writers are active. They're active at 12,000. This is for this series, but put writers are active at the 11,700 and the 11,800 mark, and since the market probably will open close to the 11,400 mark, all these positions will get shed in open interest. They will have to take those losses because premiums will rise multifold today, and call writers will actually make a lot of money today. What happened in trade yesterday? Surprisingly, call writers were active at 11,600, 700, 800. So all these people will make money, but people at 11,600, 11,500, 11,400 will be forced to shed positions because premiums will rise at a very brisk pace today. Now, as far as the VIX is concerned, VIX was down 2%, but the PCR is something that we need to watch out for. It's a new series at 1.37, but we'll see the number tomorrow because of all the put writing that because of all the call writing that comes in, and that probably will come down much higher. As far as individual stocks are concerned, some of the counters that we need to watch out for in terms of open interest decline, you had counters like Ujjivan, which was down 1.5%. GMR again, post even the airport deal, not too much enthusiasm. It was down 6%. Bank of Baroda was down 2%.
All right, Darshan, thanks for getting us that update where it's not looking very good as far as the start is concerned when it comes to the Indian markets. Of course, we'll continue to track that, but there is yet another factor that we need to consider right now. That's India's GDP growth, which may show some signs of improvement in the third quarter. Most economists polled by Bloomberg expect India's growth rate to rise after falling for 6 quarters. Pallavi Nahata takes us through the frequent macroeconomic indicators that are prompting economists to raise their expectations.
The government will release growth figures for the third quarter of FY20 on Friday, and we could finally have some good news. In Q2, GDP grew by just 4.5%, which was the lowest since March 2013. Growth continued to fall for 6 straight quarters and is now expected to rise as economists largely believe that the economy may have bottomed out. While official figures will be out on Friday, GDP is estimated to grow by 4.7% according to a Bloomberg poll of 42 economists. GVA growth is estimated at 4.5% compared to 4.3% in the previous quarter. There's a wide range of estimates for GDP from 4.3% to 5.2%. Rahul Bajoria, Chief India Economist at Barclays, expects GDP to grow by 5% in Q3. He expects higher growth in agriculture and mining led by higher crop production and fewer weather disruptions. Manufacturing is expected to stage a partial recovery after having contracted in the previous quarter, while services is expected to continue to remain lackluster. At the other end, Radhika Rao, economist at DBS Bank, also said that manufacturing was marginally better and public services registered a double rise for a second straight quarter. But unseasonal rains earlier are likely to have impacted agricultural production and supplies, according to her. She expects growth at 4.4% for Q3. High-frequency indicators for Q3 continue to show mixed trends, but are showing a sequential improvement. Consumer durables and consumer non-durables, though, weakened further in Q3 compared to Q2. Non-oil imports, auto sales and rail freight, though contracted at a slower pace in Q3. While PMI remained flat, core inflation, which is a critical indicator of demand, grew only by 3.6% in Q3. Core IIP contracted further at 1.7%, while exports contracted by 1.1%, which was lower than the contraction in the previous quarter. Foreign tourist inflows remained positive, growing at 5.6% in Q3. If these latest economic predictions are to be believed, we could see a growth in GDP for the first time in 6 quarters. The key question is by how much?
And now Nikki Mirchandani joins us with the stocks in news. Nikki, which are the stocks that will be at the center of the action today?
Sure. Apart from IndusInd Bank, I'm going to touch base first upon a small transaction which has happened for HPCL and ONGC. The company has informed that two companies would be acquiring around 17.3% stake in Petronet MHP for a consideration of around 185 crore. The transaction is expected to be completed in Q4 FY20. Post-acquisition, both these companies together will hold around 50% stake in this Petronet MHP. We're also looking at IndusInd Bank, where the bank has finally appointed Sumant Katapia as the CEO succeeding Rumesh Sabati. The new CEO will take over in March. With this, brokerages suggest that CEO appointments relates, it ends all the uncertainty. Now, the focus of the bank will continue to be on the retail side, especially the retail liabilities. One can expect near-term asset quality stress to continue, and some mid-corporate and SME loans under SME2 may slip into NPA. But overall, we're looking at a positive development coming in for IndusInd Bank. Syntex industry, some negative amount of reaction can be expected on this counter, because the company has informed that it's not going to go ahead to divest the stake, 24.99% stake in the overseas subsidiary, due to non-receipt of favorable deal. Now, this divestment was expected to take place in order to meet the long-term working capital requirements of the company. On account of that, you can expect some amount of stress coming in overall on the balance sheet of the company, which doesn't augur well for the company. Motherson Sumi, where S&P has revised the outlook on one of the subsidiaries, Motherson Automotive. That is the subsidiary where the outlook has been revised to negative, so amount of negative reaction on this as well. And Pidilite Industries, a small transaction there where the company is going to go ahead and acquire a 70% stake in 10X India Stone Products for a consideration of roughly around 80 crores. So it's a small acquisition that we're talking about.
Thanks so much for that, Nikki. But there's lots to talk about over the course of the day, and you will find all the live market action on BloombergQuint. But there are also a few stories that you should consider reading on our website, BloombergQuint.com. Here they are. The death toll has risen to 38 in Delhi, even as violence has ebbed, but tensions remains high in the area. Security forces are patrolling the streets. And India's power demand rose for the first time in 26 months in January. The latest data released by the government shows that the sharpest rise came from industrial states like Maharashtra, Karnataka, and Andhra Pradesh. And with that, it's a wrap on this edition of All You Need to Know. Stay tuned to BloombergQuint for more news and updates.